Perfect. And
Hello and welcome, everybody. This is Chart Request Live. We do this show twice a week right here on Stock Market TV, every Tuesday and Thursday at 1 o'clock Eastern Time. Myself and Patrick Dunawilla will go through all your chart requests, any tickers that you guys are interested in, live charting right here. Talk to you guys about it in the chat. We'll all figure it out together. How you doing today, Pat?
not bad. How about you?
It's just another Tuesday for me, my friend. So, programming note, we're going to have a regularly scheduled show today. Try to keep it to a half hour. We have a very special event coming up. Pat, if you could drop the link from Slack into the
Sure.
YouTube chat, that'd be great. I'm very excited. I'm going to be tuning in at 2 o'clock right here on Stock Market TV. Ian and JC are all bulled up on precious metals, and I'm finally in. I told Patrick, God, 4 or 5 months ago now, hey, my New Year's resolution is no gold, no precious metals. And I broke it. I broke it. What? I didn't even make it 3 months.
Well, listen, the facts changed, and like a good analyst, you changed your mind there. So no shame there.
That's right. So Ian and JC are going to come on. They're going to talk to you all about those facts in just about an hour here. So when you're done with Chart Request Live, you could just stay tuned for some precious metals talk. We think it's a brand new bull market for these assets, and there's going to be a lot of bullish opportunities, whether it's the gold miners, silver miners. We got platinum, we got palladium, right? It's a whole complex. There's a lot that we could do. There's different strategies that we could deploy to make money during this new bull market. But I think it's finally here. I'm going to throw the chart up. I mean,
Steve, I don't think I've ever seen a market shake out the weak hands more than gold did before this breakout.
yeah,
I mean, it really made it so that it was very hard to believe a breakout was coming.
that's right.
Even when it did break out, it was hard to believe that it would stick.
And that goes back to, like, we joke about my New Year's resolution, but that's why, right?
Right.
This
Absolutely.
chart just broke our hearts so many times. You tried to get bulled up on gold and it failed just time and time and time again. This is just the consolidation over the past several years. I'm going to zoom out in just a second to show you the bigger picture. But 2100 is really that big level for gold.
Yeah, and there's a bit of a fractal nature to it. Like the last 3 years almost look like the last like 10 years, right?
Exactly right. So this is what Pat's talking about. Flipping it to a monthly here, and we'll just extend this breakout level, make it a wide bar here. That's it, right? So this is what everybody's all excited about. You have a base on another base and a very decisive breakout, right? Above this 2100 level to 2000 level. The breakout is in the books. So what do we do now? That's what today's webinar is going to be all about.
And for gold, yesterday was like the worst day in a couple of years, something like that. But if you fib out that the smaller base there, it hit the 161 extension,
target,
and that's where we dumped. So after an incredible run, I mean, this is a pretty logical place to see some of that correction
right.
happening. So
That's important context, right? First target's already hit. And frankly, if you fib out the big base, your target was already hit too, right?
oh yeah, that's right. That's right.
So everything going well for the gold bugs. That's exciting. Let's
It's been a
talk
while since we've been able to say that.
That's been my whole career.
Yeah.
Let's talk about some charts. What do we got?
All right, let's rip through them. HIG, let's start with that one. This
Hartford
one comes from
Insurance.
Dan. He says, just bringing a massive base for the people.
That's a big base for the people. Yeah. Look, I know and love Hartford very well. So I guess I'm biased. This used to be Hartford Insurance Group. Hence,
Is this named after Connecticut, like Hartford, Connecticut?
yeah, absolutely. So Hartford, Connecticut, many of you may not know, is considered the insurance capital of the world.
Really?
Yeah. So it was not uncommon for my friends from business school to go and kick off their careers at any one of these insurance companies. If you were a finance major at UConn, that's that's probably where you were headed, particularly after the great financial crisis. As you know, Pat, insurance companies come with a degree of defense or safety, right? These are quality names. Um, they are quality cash flow businesses, right? Tend to wear out volatile periods, corrective periods, bear markets better than most. So I came out of school during the great financial crisis. The insurance companies were some of the only guys there offering jobs. 2009, 2010, 2011. So a lot of my friends ended up there. I know some guys who studied actuarial science, who have
I
some
didn't
really
know
good
that was a
jobs
thing.
right now. Yep. So yeah, Hartford, insurance capital of the world. HIG is a big one. You got the base breakout. Basically, I think you could use a $100 roll here. It's a key psychological level, and it gives you a tactical level to kind of, be long against. We're trading at 100 and a quarter right here today, but the breakout is not really in the books until we take out about 105.
Steve, for a second there, I thought that waterfall decline there was COVID. I'm so used to seeing that be COVID, but
That
this thing's just reclaiming its financial crisis highs.
This is the financial crisis I was just talking about. So, yep, 105, 106. From there, I think you got about, man, 60% of upside back to 170
All
or
right.
70.
Let's move on to Shake Shack.
Mhm.
They got Shake Shack down in Florida?
I don't eat that shit. The burgers are too small for me.
Probably good.
Uh, Shake Shack. This is what's his name? Um, the restaurateur from New York, Danny Meyer, I believe
Danny
it is.
Meyer.
Yeah. New York people know that name. So you got some sort of a base here. I'm just going to zoom in. Chart's been messy forever, Pat, right?
Yeah.
Is the important thing to kind of note for context. And now if we zoom in, I think you can get long here. I think this one's in a good group. I think it might be, this is like not fast casual, but it's like fast fancy. No, is that fair to say? Like this isn't
Yeah.
Five Guys, or what's the delicious burger place that Giancarlo took me to out there?
Wouldn't be In and Out, is it?
Yeah, In and
In and
Out.
Out?
Fantastic. Shake Shack is a little bit, I don't know. It's a little bougie for fast food. It's like, I guess, like the Chipotle burger. This is like the
Yeah.
Chipotle
I
of
mean, you're not getting out of there under 20 bucks for sure.
I don't know if you can get a burger for under 20 bucks. Burger, fries, drink, you're over 20 for sure. And to be fair, at Five Guys, you're high teens these days also. But Shake Shack coming up on the 62% fib retrace also comes in at that key psychological level of 100. I think you could trade it from 100 back up to the prior cycle highs here around 137. I don't love it though.
Yeah, I mean, if I were to ask you what the primary trend is here, it's like,
I would say the primary trend's higher, but the structural trend is just sideways, right? I mean, we're
right.
trading around the post IPO highs from 2015. People have been excited about this stock for a decade now. It's gone nowhere.
Yeah. Let's move on to CRS.
And
Si-
is there really any difference between custard and ice cream?
I
Right?
wouldn't know it if there was.
Right.
But this one comes from Daniel. He's looking at CRS with a 6 to 9 month time frame.
I love it, Daniel. We're big fans here. Are you sure this
Ooh-wee.
wasn't Mr. Sam Gatlin, Pat? Because I think,
It's not Sam. It's Daniel Duvall.
oh, Duval.
Duval
What?
Street.
Duval. Hey now. 80 bucks. 80 is your level. This is one of our favorite patterns to trade, but it's only for the patient. If you're one of these quick hits guys and you're looking to go 10x on your call options, I get you, but this one's not for you. Right? So yeah,
This trade might fail more often than not, but when it does, and I'm not sure, totally there's no stats
not that
backing up what I said,
it's not that
but
it fails more often.
when they do, those are some of those trends that are just impossible to get into, and
Yeah.
they're just steady bleeding.
And I want to say what you just said, but differently. It's not that it fails more often than not. It's that it takes time to complete,
Right.
right? So you'll see so many false starts in these decade-long, multi-decade bases, right? You'll get a false start, false start, false start. You might get shaken out or stopped out 3 times, but when it finally goes, the reaction legs are explosive.
Yeah, I mean, it goes back to what we were saying with gold at the top of the
Right.
show. You know,
Dude, this is
it'll
gold.
wear you out, right? They don't shake you out. They'll wear you out.
Absolutely right. I think for this one, if we were to get a little bit more tactical, breakout levels here at 80, you have another polarity zone here. If anybody's looking to like scale in, right? You got a big box here that you could pay attention to, but we're out
Mhm.
of there. What I think is constructive from a tactical standpoint is that you had a consolidation, right? You just had one of these kind of
Yeah, and
going
you're in a
on.
weekly chart, so that's a long consolidation.
Right. So we went pretty much nowhere from August 23 to April of this year, then exploded out of this little coil and are now threatening the all-time highs from 2007. This looks really good. This looks pretty fresh from a breakout standpoint. And then you got a coil into a coil here. I think you could just
Wow.
buy this resolution right here.
You know, you really broke this one down perfect, starting big picture and then zooming in here, just kind of making the point that this thing's working out in multiple time frames, right?
And then also from like a market internal standpoint, this is a place that you want to be. I believe this is building materials.
Is it,
Uh,
yeah, I mean, it would make
this is a
sense.
group we've been leaning on. I know that you've been leaning on. Our bottoms up scans have been so good to building. Well, I'll say building materials have been so good to our bottoms up scans. But this is the kind of group that you want to be fishing in right now, and it's set up perfectly. I think you could buy this resolution. If we close here today, I'm pretty much okay with it above 81. So above 81, price target at the first fib, 120. Not bad. It's 50%.
Not bad at all. So this next question is a very broad question. It sounds like Mark here just wants you to break down the financial sector. He
Yep.
asked
Love
about
it.
XLF on a relative basis.
Great. Done.
Regional banks are having their moment. KRE has chopped sideways, but it's been resilient lately.
Great question,
Names like
Mark.
M&T Bank, PRK,
Right.
WSFS.
I got you. Pat, we're going to start with the relative trend because it's
Cool.
important. I want
Perfect.
leadership. If I'm going to get involved in any area of the market, there's going to be leadership there, right? You
Right.
guys know me if you've been paying attention, if you've been watching our videos. This is something I look for. Like this is, I have alerts set for these things, new 52-week highs on a relative basis. That's exactly what financials are doing right now. And they're doing it in a tough tape, right?
I
When I
think
say
sorry, go ahead.
no, when I say tough tape, I mean simply the market's been correcting.
Right.
At the broader average or index level, hasn't been too easy to make money out there on longs. Financials are a place where people have been making money since last week. So we have this explosive breakout to new 52-week highs. Do you see this here, Pat?
I sure do. That looks like the regional bank crisis.
This was the banking crisis from this time last year, right? Where it was really just like a waterfall lower,
Yep.
the whole group. We're back into that box, right? This is a memory gap for all intents and purposes,
That's a
where
great point.
prices blew through it, and I expect them to blow back higher or blow back in the opposite direction now that this base has been completed. This is a 12-month rounding bottom reversal pattern. This is what they teach you in the textbooks. This is a primary trend reversal if we hold this. Why do I think that this breakout is so valid right now? This is the 5-day rate of change for financials.
On a relative basis.
Yes, on a relative basis. We haven't been this high. I'll have to go all the way back to January of 2022.
So you're getting like a thrust in the outperformance.
Absolutely right. This is a momentum thrust, or what I really think is an initiation signal for financials on a relative basis. Okay, so if the charts are telling us that financials are assuming a new leadership role over longer time frames, right? So they're going to outperform the broader market for the intermediate to long term. That's what this primary trend reversal suggests. Well, are they going to break out on an absolute basis? It's a bull market.
Well, they already did, and then it's been a little sketchy.
They false started. Let's just go way out. It's so good.
For
These
me
are
with financials, and I've said it before today, but I just think it's so impressive, and not enough people are talking about this, that financials have led off of the October lows, off the correction lows. So
That's right. In a real big way. And without the banks, right?
that's a great point. Yeah.
Like I think the banks are just getting started, but it's been insurance, it's been private equity, it's been capital markets, it's been broker dealers. That's
That's a
all
great
good.
point.
I think the banks are joining the party now. Insurance has always been there. It's like there was never a bear market for
Yeah,
insurance.
I mean, you made a great point about them being kind of a safe haven because we saw
Yeah.
that, and they were one of the first groups to show relative strength early on last year.
They're bear market stocks more than bull market stocks, but at the end of the day, they're good stocks, right? Insurance business is good business. So I just think that pointing out this polarity zone here is so important. The the hard work is done for financials. This was a 15-year base, right? That we were looking at and watching for my whole career. Finally got the breakout back in 2021. We got a pretty standard retest with a bunch of touches and then a primary trend reversal that we were just talking about, right? So now I'm going to zoom into the daily. This is now a base on base, right? And why would we doubt it coming off such a structural breakout? We were just talking about this same chart structure with what was the first one? CRS, right? This is
Yes.
the same pattern, only the breakout's in and a retest is in, and now we're back at all-time highs. So if we zoom into the daily, I think considering the relative strength for this group of stocks right now, this is, I don't know, days to weeks from materializing into a sweet consolidation pattern breakout. So just draw it a little bit differently here. That's it. This from last month, simply a false start. And I think over the coming days or by next week, we're looking at this one saying, wow, what a sweet little bear trap setup that was, right? So we're bull hooking right now, trapping the bears on their shorts. If you didn't cover last week or the week before on a trade like this, where XLF fell from 42 down to sub 40, so you got 7% in a matter of days. In the context of a bull market, if you're not covering, I don't know what you're doing, right? So this one's about to rip higher in any remaining bears faces, and the setup couldn't be better.
I
So
got to tell you, a lot of these failed breakouts, they're really not, whether we're talking about some of the indexes earlier this year or some of the more recent ones, they're really not giving you much downside. Like if you were to bet against them and short on that failed move, you really wouldn't get a ton of downside, which I think speaks to the bull market, right?
that's information, right, Pat? It does speak to the bull market, right?
Absolutely.
Corrective action in the context of a bull market, you want to be careful with, right? You're trading mean reversion, you're trading a counter trend move. So I don't think shorts would be smart to kind of try to press on the gas here. You do have a level to fade against, but if we're above 41.50 and we're at 41 and change right now, we're above 41.50. You can only be long. XLF, I think, heads back towards 50. The first fib comes in at about 49. And then in there, this is the space. And Gene, can I bring up a table? Talk to me. Can I just drag a table up? Let's try it. So this is capital markets. We just ran a scan internally. We talked about it on Spaces, Pat. I already tweeted it out. You can go find it on my Twitter. But this is about to go, and I think this is the place to be right now. These stocks have a heavy exposure to real estate. These are the same names that had balance sheet risk, similar to the regional banks last year. And they're just coming out of, I think, an environment where people thought a lot of these would really suffer, and they've been just fine, more than fine, really. So capital market stocks at the top of our list for trade ideas right now. I just want to bring this table up real quick. Bonds did such a nice job on it. good with that, Gene? So what do we do? That work? So capital markets and asset management stocks, they are all so close to their prior cycle highs. So what we're doing in the last column here is we're sorting by proximity to the 2021 or 2022 highs. And what you have is a bunch of charts that look like, well, I'll show you some examples. So if you want more of this research, you could just check it out on the blog. But they all look like this, Pat. This is Jeffries with a really nice retest and now going. This is Raymond James Financial with a really nice little.
That gold one, Goldman one you mentioned earlier, I really like that chart.
Which one?
Goldman, GS.
Goldman looks great. This is TradeWeb, right?
But Steve, we only got about 5 minutes left. We got two more tickers in the mailbag, and then I want to try to hit a couple more in the chat. I know we didn't get a chance to get to that yet.
Oh, let's do it. Go.
You ready? Let's do OC with a. Did we already do that?
Owens Corning.
No.
If you're ever in upstate New York, this is where Patrick grew up.
Yep.
Actually, you're a little bit north of where I'm talking about, but Corning, New York. The glass.
It's right near Ithaca.
Fantastic. What a good time I had there. So let's just fib this bad boy out. Really not much there. We're in the middle of a range here, but it is a leader, right? So if we do Owens Corning relative to the broader market, let's just illustrate that. It's a good stock. It's about to break out of a multi-year consolidation on relative terms. Where you get involved right now, flipping it back to the absolute, I think is a tough one. You do have pivot highs here, so you could just play it off that.
Probably the best way to do it.
Already well on its way. Above 160, I think you'd be long all day. Next stop at the 261 fib of about 207.
Man, that relative chart, that was not expecting to see that.
Yeah, dude. Oh, I mean, you're a New York guy. Syracuse people aren't big fans of Owens Corning. So they make Pyrex and all like the measuring cups and like the really like heavy duty glassware, I guess.
Yeah.
But also they do stuff with like photo optics and cameras. Like it's a whole thing, right? Like telescope.
Yeah. I don't know if they still make the iPhone glass, but they used to be.
Yeah.
They had Gorilla Glass, I think it was called.
GLW, wasn't it? Corning
Yes.
Incorporated. So there was a spinny here where you're absolutely right, Pat. Fundamental people, go look into this on your own. But they split the company up between, I guess, the different businesses that we're discussing here. And I'll just say Corning Incorporated, GLW, doesn't look nearly as good as Owens.
Good stuff. All right, let's do Wavy's request here. That's BBAR.
Yeah, I know this one. So the Latin banks, is that like the Latino banks?
Yeah, a lot of those popping up on my scans lately.
Me too. I remember BBVA from back in the day. This is a big one. One of the largest banks that operates in South America. I would fib this out like this. I want more touches, not less. And when you tighten that up a little bit, I think $10, just north of 10 is a big level because you missed the base breakout here, right?
Right.
Base breakout happened right about here at $5. So it's already doubled off the base breakout level. Now you're looking for some sort of continuation pattern. We prefer them high and tight. This one's a bit volatile from a correction standpoint. Zoom in and show what I mean.
That's a cheap one. That'll happen.
It's there, right? So I think, you keep this simple. If you're in it and you're already in it, you want it above the pivot highs from earlier this month. 950. I don't love today's candle, right?
Yeah.
If we close here today, I would say, this trade's probably done. If we're holding 950, those pivot highs, I think you let it ride to the next fib, right? But this one, it's already been good. And look, a lot of banks out of Latin America look this way, Wavy, I love you. You're great, but you didn't just find the only one that looks good, right? So here's Grupo Financiero. They're all really working. If I went to Japan or Korea, I could show you the same thing. I think the bigger takeaway here is, and this goes back to Patrick, the last request question about financials
Yeah.
on a broader scale.
And he actually mentioned in his request some of the ones overseas, like BMA and DB, yeah, Deutsche Bank, DB.
Absolutely. Santander, even, which is like really the big bank out there in the Latin American region, like just looks so good, right? And Pat, you know the pattern that we're talking about, right? When you zoom way out on these, we just did this like last week, right?
Yeah.
This is it. Not a trend line guy, but these things are reversing trend in a very structural way, and it warrants our attention. And then from hey, financials as a group to kind of lean on or overweight for this bull market, that when they're all working, not just domestically, not just in the US, but banks overseas, not just in Latin America or South America, but also in Japan and Asia and Southeast Asia. When the banks everywhere are working, that's just a good time to be fishing in this pond of financials, right? So
Yeah.
everything's starting to fall into place for financials as a sector. I think we can get a little creative. We can go to the banks, we go to the regional banks, we go to the community banks in the United States. I think we go to the capital markets, private equity. I think you can go crazy on financials for the rest of this year.
Well, listen, Steve, we're just about at the end of the show here. We got to wrap it up early today, but we'll be back next Thursday. And I got to tell you, we weren't able to get to any of the requests in the chat, but a lot of them are financials. So our audience is definitely fishing in the right pond. They're definitely
Oh,
listening to what you're saying here.
that makes me happy to hear. No Bitcoin miners though.
Let's see. I'm sure there is if we dig closely. Why don't you do ARES real quick and
Dude,
that'll be the show.
So Aries Capital Management stands alone as the best one. I just showed that table, right, of asset managers and capital markets
Yeah.
equities. This is the leader. The
Were,
leader
were
of
they at the
all.
top? I can't remember who's there.
They're the best one. I don't know if they're at the top of our scan. I lost it now. I can't bring it back up.
Regardless. I mean, that looks like one hell of a bull flag
But
there.
yeah, I'll just illustrate that point real quick. We'll do Aries versus IAI. IAI is the iShares broker dealer and asset management index. Look at the relative trend off the 2017 lows, right?
Wow.
And it's not just denominator bias. Let's do Aries versus the S&P 500. Dude, talk about leadership, right? This is the definition of leadership, straight up and to the right. This
No
looks
matter how you slice it.
so good. And when you look at the Aries chart itself here, so glad you asked about this because I was literally just looking up different ideas of how to get long this one. I'm not
Shout
long.
out to Sambo1618.
That's Gatlin, dude. God damn.
Oh, that's Sam?
Yeah.
That's why.
Sam keeps bringing the heat. But look, these are the continuation patterns that you want to be buying in bull markets. This is the pattern above all patterns, right? In a new bull market, you want to be buying the reversals. In a mid to later stage bull market, you want to be buying these continuation pattern breakouts. I think Aries is pretty much about to complete one right now here today, up 3% on the day. This is a textbook flag. It's a long flag,
Yeah,
month flag.
definitely pushing the limit there.
Next stop 150, and you're going to get confirmation at the pivot highs here. Call it 139, right? So that's it. Aries all day. This one looks better than anything in this space.
Yeah. Wow, I hadn't looked at that one. But
Yeah.
listen, I'm really sorry we weren't able to get to the chat today. Come back on Thursday and we will be sure to get to as many as we possibly can. Steve, you want to lead us out?
Yep. Thank you, everybody, for joining. As always, we love this show, and it's because of you guys. So join us again on Thursday at 1 o'clock Eastern Time. Patrick will be on the charts. Always a good time. But again, in 30 minutes from now, join us on Stock Market TV for Pat. You dropped the link.
Yes, but I'm going to do it one more time.
Gold Rush. Hit that link and then join us on Stock Market TV. I think this is going to be just an awesome webinar. There's so many bullish opportunities in precious metals right now. Join us on the morning show every morning, 8:30 to 10 o'clock Eastern Time.
Good stuff, Steve.
We'll see you on
Thank you,
Thursday.
guys.
Bye, everybody.